I know you love the excitement of taking trades and making profits, but sometimes the best trade is actually no trade. Knowing the right time to stay out of the market can save you your trading account and also your sanity. So in today's video, I'll be giving you the 7 crucial red flags that signals it is time to take a step back from the market. As cool as it is to get into trades and make profits, well, let's be real, trading is not always a straight line to success. And sometimes the best move you can make is knowing when not to trade. So today's video, we are diving deep into the critical signs and the scenarios when stepping away from the chart is your best and smartest strategy. You are welcome back to my channel, and if you are new here, I'm your host, Baby Forex, and I like to share trading tips, strategies, and knowledge to make you a better trader. So be sure to stick around and hit that like button, subscribe right now to this channel. And finally, grab a pen, grab your favorite notebook, and let's get to work. So the first point on this list of 7 red flags you must watch out for when you are trading is what I call a lack of a clear trading plan. So we all know how important a trading plan is. So if you do not have a good trading plan, a well-defined trading plan, you have no business trading in the market. So be sure that you have a good and properly defined trading plan before you start trading. Trading plan controls everything that has to do with your trading activities, from your technical analysis to your fundamental analysis to your rules of engagement. It covers everything. So if you do not have a well-defined trading plan or a trading strategy, it is best not to trade, right? So trading without a plan leads to impulsive decision-making and significant losses. So be sure that before you start clicking buy or clicking sells on the chart, you have a well-defined trading plan that guides your activity and also provide a good hedge in the market. A good hedge simply means you have more chances of getting wins than losses, right? And also defines your rules of engagement regardless of whatever conditions the market presents to you. So trading plan is actually very important. Be sure to have one. And the second point on the list of 7 red flags you must watch out for is what I call unfavorable market conditions. So the market always changes conditions from time to time. If you are not comfortable with changing market conditions, you cannot adapt to changing market conditions, it is best not to trade at that point in time. So we need to avoid trading during highly volatile or unpredictable market conditions, such as the major economic news release or geopolitical events. Example, if you have NFP, if you have interest rate and all of those stuff, you need to watch out that you are very comfortable trading at that point in time. NFP may come out, CPI may come out, and the rest of them. So you need to be sure that you are very comfortable at that point in time that you're about to trade. So watch out for market conditions, right? Market conditions changes from time to time. So be sure that you are able to adapt and then trade safely regardless of the changing market conditions that may happen at the point in time. So let's watch out for that. So the third point on my list of 7 red flags you must watch out for when you are trading is what I call emotional state, right? We all know how it is to be very emotional when you are trading. So you need to make sure you have full control over your emotions when you are trading. Emotions controls the market. So it is very important that we are not making decisions based on emotions in the market. So if you are feeling stressed, if you are feeling anxious, if you are feeling nervous or overly excited, it is best to step away from trading altogether. So emotional trading can lead to poor decision making and also a lot of losses. So be sure that you are emotionally stable before you start trading in the market. So the fourth point on my list of 7 red flags to tell you not to trade is what I call over trading. So if you find yourself trading too often or too frequently without a good reason, without a valid reason that goes in line with your trading plan, then you should not be trading. So it may be time to take a break. Over trading can deplete your capital and lead to a burnout, right? If you are trading too much too often, it is a red flag, right? It is really a red flag. So watch out for that. Over trading is not a good sign. It ends up making you take wrong decisions in the market because you are taking decisions too frequently, and the chances of making the wrong decisions are very, very high. So watch out for over trading, right? It is best to take a few quality trades compared to taking a lot of poor trades in the market. So be sure that every trade you take are carefully selected and checks all the boxes for you according to your trading plan. So watch out for overtrading. When you find yourself overtrading, it is a red flag and it tells you to step away from the chart. So watch out for that. And the fifth point on these 7 red flags, before I go on to the fifth point, be sure to take a break, take a moment to hit that like button, leave a comment and subscribe to this channel to keep enjoying this kind of quality content from time to time. So the fifth point on this list of 7 red flags is what I call loss streak. So if you find yourself in your trading where you are taking a lot of losses, back-to-back losses, frequent losses, it is the best time to step away from the chart to get a clear mind and a clear head before you start trading again. So loss streak is also one of the best indicators that you should step away or take a break from trading, right? So if you are experiencing a series of losses, it is wise to take a step back and reassess your strategy before you continue trading. So continuing to trade during the losing streak can worsen the situation. So be sure that whenever there is a losing streak, you are able to take a step back and reassess your strategy before you continue to trade. So losing streak is the best time to take a break from the market. So probably you are trading and you've taken a lot of losses. You are trying to make back what you have lost, or probably get break even on what you have lost. It is the best time to really take a break. So chasing that can also lead to over trading, and it also worsens your loss situation. So be sure to watch out for loss streak when you are trading. And the next point on my list is what I call the market hours, right? So if the instrument or the currency pair you are trading is not in session, right? If you are a scalp trader, if your market is not in session, you need to be sure that you are not really looking to take a trade when the market is not in session. Because when the market is not in session, probably you end up accumulating a lot of losses in the form of spread, in the form of fees, in the form of commissions, because you end up putting trade longer than you should. So if you're a scalp trader, if you're a day trader, probably you hold trade for a few days, you need to watch out for those things. So if the market is not in session, probably it is not the best time you should be trading. So be sure to take trades when the market are in sessions, and also when the market hours are favorable with the instrument that you are trading. So watch out for that. It is actually very important. Trading during low liquidity periods such as market off hours or holidays can result in poor trade executions and increase losses. So watch out for that. So the last point on this list of 7 red flags you must watch out for when you are trading is what I call over leveraging. So if you find yourself tempted to use excessive leverage or higher lot size or position sizes just to amplify your profit, it is a signal to stop trading, right? Trading is all about discipline. You cannot chase profit every time in the market by trying to increase your lot size or position size to a level that you should not be trading. So it is very good to stay within your risk tolerance, right? So over leveraging is one of the signs, one of the red flags that tells you you should not be trading at that point in time. If you find yourself trying to increase your lot size or use excessive leverage just to amplify your profit, it is a bad signal. So over leveraging can lead to significant losses because leverage is a two-edged sword, right? So it can work for you, it can work against you. So it is very important to take note of that. So over leveraging can lead to significant losses if the market goes against you. So watch out for leveraging and watch out for everything else I'm just explained in this video, and I believe you are going to make the best out of your trading activities in the market. So be sure to give this video a thumbs up and drop your comments in the comment section, and also check the link in the video description for our trading services to work with us directly. I'll be off for now, and I'll catch you again in the next video. Bye.